Good morning, good afternoon, good evening, wherever you are in the world, and welcome to today's podcast. It is Monday, the 8th of February 2021, and we're going to take a look at some evidence for what is going on with gold and silver at the moment. But before we do that, just a quick reminder that you can click on the link on my YouTube page here and sign up for our free newsletter. It's the Silver Chartist newsletter. We've got Steve Penny and contributions from myself, Kevin Wadsworth, and also Patrick Karim and Jeff Clark. So a lot of really good technical and fundamental analysis and insights there, charts and discussion around what's going on in all of those markets. And also just to point out that you can find me on Twitter at North Star Charts, capital N, capital C at North Star Charts. And again, there's the link there for our free once a week newsletter that kind of sums up and rounds up everything that's going on in precious metals and also in other commodities and occasionally crypto as well. I'll sometimes sneak a crypto chart in there for you. So diving straight into the gold chart. Let's have a look at what's going on. We can see very clearly the arc-shaped basing formation. If you've been following me on Twitter, you'll see that I'm a bit of a fan of these arc formations. They occur all over the place, and when you see them combining with a bull flag or a pennant like this, then it gives double confirmation that we have, or when we get a breakout to the upside, that we're going to start trending in something more akin to a bull market. And quite typical here, we've seen a breakout and a back test, which gave further confirmation of the arc. You can see the places where the arc has been confirmed. I'll just move the arc out a little bit to the left, and you can see the touch points on the arc there, one there, again down here, across here, and also here on this back test after the breakout. And also the spike down in March, interestingly, touched the arc as well. So no technical damage being done to the gold patterns here, the technical analysis patterns that I've been putting together. And you can see that we've formed a very nice pennant or bull flag formation over the last 6 months or more, well, since last August really. The price got up to nearly $2,100 and it's been pulling back, and it wouldn't be particularly surprising to see it pull back to around about or just above $1,700 and test the arc again. But really, I think this level here, where I'm just hovering the cursor now, where these two candles have dipped down to, they correspond with these two candles over here on the left-hand side, monthly closes, around about, it's a bit hard on this scale to be absolutely certain, but somewhere around 1770. So it'd be nice to see maybe 1780, 1770, that level continue to hold, and that would sort of confirm that we're not going to see a bigger handle forming. Sometimes these cup formations, as some people call them, they'll form a handle, and that can pull back quite some distance. And on this particular chart, it could easily come back down to sort of, I don't know, maybe $1,500 or $1,600 if it was going to build out a large handle on the chart. But that's not really my expectation. We can see the stochastic indicator has just had a bullish cross and starting to show some signs of turning back up. So my primary expectation is for an uptrend and a breakout over the coming I suppose, couple of weeks, coming sort of few weeks, and an uptrend to sort of become sort of take over, taking us through the first quarter of this year up until April, May, or even into the early summer, before we see a little bit more weakness, perhaps an extended period of weakness through the summer months, and a further sort of move up in the autumn. So we'll have to track all that in real time, of course. But this sort of red zone here is where I'm expecting to see price dropping down to in the 8-year cycle low, which will be in 2023 or possibly 2024, if it was to coincide with the November election in 2024, which very often happens. So sometime in this time zone, I'd expect the price to fall much more substantially. But that's all in the future. So we're looking at evidence to support what's going on at the moment. And if we look at the gold and silver ratio, often a very good indicator of the strength or weakness of the precious metals markets. And when you see the support levels being broken to the downside, as they were last year, and saw a rapid drop down into August, then that was accompanied by a precious metals rally, of course, to the peak somewhere above $2,050. Can't remember the exact number, but it was between 2050 and sort of 2100. We didn't get to 2100. And then we started to form this support line. Another touch here. This grey area is a support zone that I'd identified quite some time ago before this all happened. And sure enough, prices sort of halted more or less in the middle of my support zone. And it's kind of gone nowhere since. The gold silver ratio has gone up a bit, down a bit, and effectively just sideways for several months now. That's been accompanied by weakness in gold, both gold and silver, particularly gold, really. At times, it's silver's shown more strength, but regardless of that, we've just recently seen a breakdown of the gold silver ratio, which corresponds with strength in the precious metals markets. And this was all in association with hashtag silver squeeze and hashtag Wall Street bets and all the shenanigans that went on a week or so ago. A lot of excitement, but of course, we don't really want to see that excitement at the moment. That's the kind of thing that happens right at the end of the bull market when you enter the parabolic phase, and that's a number of years away yet. This very early days in the precious metals bull market, so we don't really want to have all this stuff going on. And I'm glad to say that was all over in a day or two. So the ratio came back and back tested the breakdown. Classic technical chart analysis thing to happen. And it backtested the breakdown, and it has been confirmed as a resistance line now because the ratio is trending back away from that line, which is good. A weak gold silver ratio tends to mean strength in the precious metals and silver outperforming. As it drops away, then it means that silver is outperforming gold. The percentage gains in silver are more than the percentage gains in gold. You can see that stochastic indicator is also bearish, supporting the ongoing weakness which we're likely to see in the ratio. So that's all good. So moving on to the dollar index, and of course the US dollar index is really important. Over longer periods of time, it corresponds with strength and weakness in the gold and silver markets. And if the dollar index is weak, it very often means that over a period of time, that gold and silver show strength. It really acts as a rising dollar index acts as a headwind to gold and silver, and a falling dollar index is a tailwind. So we're in a little bit of a rising channel here. These often turn out to be ultimately bearish patterns that break to the downside, but not always. So we can't really draw any conclusions from that. We've also been in a bit of a sort of a triangle formation, which broke to the upside, and we've come back down. We haven't tested it from above yet. Going to be interesting to see whether we see a bit of a plunge down through this apex here and then on down, or whether we continue to test one of these upper resistance lines, either the channel resistance line, which would be perhaps somewhere around 91.7, that kind of area, or whether we go on up to the next horizontal resistance line, which would be up around the 92 point, or just above 92, should we say. I'll try and be too clever with this, but just above 92 on the dollar index. Now, taken to the extreme, we could see the dollar index move all the way up to above 94, and this red dotted line is the uptrend line that goes all the way back to 2011. The dollar index tried to hang on to that uptrend line. It's been acting as support through the dollar bull market, but the dollar index lost its battle to hold on to that support line, and it fell below it, and it's now a resistance line. So in theory, we could move up all the way up to there to retest it, and that would be very bad for gold and silver, of course. Put a lot of pressure on gold and silver. It's not true, by the way. It's not true to say that every time the dollar index goes up, gold and silver goes down. That's not quite true. But if it does it for a longer period of time, then it does exert a sort of a downwards pressure on gold and silver, and stops them rising as much as they would otherwise have done, or indeed it pushes gold and silver down altogether. But being a little bit more optimistic for the precious metals markets, I think certainly my expectation would be for a limited upside here and then a downside break of this support line. Now, all that really matters, and the only thing that matters really, is this dotted red line down here. It's the 88.25, and that goes all the way back to the the previous low in this cyclical downturn in the dollar index. If we see the dollar index moving below 88.25, it confirms that the next 3-year cycle is going to be in a downwards direction, taking us down to complete the 15-year dollar cycle in the way that I would expect it to be completed, with a final destination below 70 on the dollar index and probably well below 70. So that's my sort of base case, if you like. That's what I expect to happen, but I'm not ignoring the possibility of what some other analysts and well-respected analysts are suggesting, i.e. that the dollar index is going to break out and move up for a number of years, and that the gold and silver are going to be in a bear market for a number of years. So, that's not what I believe. That's not my expectation. But there are some well-respected analysts out there who are saying that. So it pays to be very aware of these sort of resistance lines above, because if we break through them, then it's actually telling us something that we need to take careful notice of. But more importantly for me is what happens if and when we come down to test this 88.25 level. Another part of the jigsaw puzzle is the euro-dollar pair, the euro-dollar ratio. The dollar index is made up of the euro, the pound, the yen, the Canadian dollar, a couple of others as well. And when these, in fact, the euro is around, just under 60% of the dollar index. So if the euro is strong against the dollar, then it pushes the dollar index down, and that's good for gold and silver. So interesting to see these patterns again here in the euro dollar pairing, where we have this arc basing formation just like we had in gold, and we've got this bullish bull flag just like we had in gold, and it's we formed we formed a little bullish pennant just below the resistance line, and that's pretty classic sort of technical analysis chart action, where you get a bullish pennant and then a breakout that takes you above the resistance line. Very often, and in fact what's happened here is we've hit a horizontal resistance line and come back down to test the breakout from above. This is all normal bullish behavior, and we very often form a sort of a bull flag just above this breakout line, which is what's happened here. What we need now is for this line to hold, and for the ratio to begin to move upwards and ultimately break through the horizontal resistance line and move up. The stochastic indicator is high, you might be thinking, and ready to move down and indicate that the index is going to move down with it. Aha! But this is all this up down of the stochastic indicator has been in a bear market. So you can't expect it to carry on behaving that way if we're now moving to a bull market. You would expect it to do what the indicator does more typically in a bull market, and that is for it to spend more time in this high zone. And in fact, you can see here from 06 to 08, it spent a couple of years in this high zone, just fluctuating up and down, whilst the index moved all the way from where are we, 1.18 all the way up to about 1.58. So sort of a 50%, more or less 50% move up in the index. So all we need, or what we want, is for this stochastic indicator to fluctuate and sort of stay in this high zone above sort of 80 or so on the reading for the index. So that's another piece of the jigsaw puzzle. And finally, just to go back to the gold chart, the gold chart, and to remind you where we are at the moment. All of these things, the dollar index, the euro-dollar pairing, and the gold-silver ratio, are strong supporting evidence that would suggest that this red arrow is the path that we're going to take, rather than going down very much further. But we can't rule out further downward movement. So my expectation is 80 to 90% in favour of an upward breakout in the very near future, with a 10 to 20% acknowledgement of the fact that it is possible, mathematically, statistically, and fundamentally, that we see further downside moves before the bull market resumes. So a lot to be aware of, a lot to acknowledge and watch, and hopefully that's helped you to sort of get a bit of a background for what we're keeping an eye on. So excuse me, whilst I can still talk, I'll say thanks for watching, thanks for listening, and speak to you again next time.